The biggest insurance scams in history. Hey everyone, welcome to our channel. If you're new here, welcome. Consider subscribing to my channel and click that little bell notification below. Scams are everywhere, and there's no exception for insurance. Circumstances make people do unbelievable things, and most of them don't go undetected. So here are the biggest insurance scams in history. Starting with one of the most recent frauds, let's walk backwards in time. Number 10. Food poisoning 2020. The Hampton, New Hampshire native called Massey was found guilty of inventing cases of food poisoning and accusing eateries for it. This person lied and claimed she'd been ill from eating unsuitable foods in 12 letters, requesting $400,000 for damages. The letters demanded that the criticized eateries pay Massey back for her medical costs, suffering, and anguish. Insurance companies gave Massey and unaware family members, who also claimed they had been poisoned, more than $206,000. She managed to make fake medical records that claimed Massey had been critically ill after eating the food that were manufactured to support the false charges. When she was finally caught, she received an 18-month prison term in 2020 for mail fraud. Number 9. High fire claims 2018. Verdon Taylor, a 72-year-old native of Florida, had bought more than 30 mobile homes, used cars, and rental leases, and accidental fire claims have been filed for all of them. Taylor and his associates were found to have cheated insurance companies in the arson for cash claims instances to the tune of more than $1 million, even though there were frequently only a few weeks or days between the claims being submitted. So this person was found guilty of widespread insurance fraud in 2018 and given a 40-year prison term. Number 8. Driving while dead 2012. A man named Raymond Roth was stopped in 2012 and issued a ticket for speeding. Yeah, that's nothing to be surprised by. But what if the man was someone who had already died? Raymond Roth had been the focus of a large police search just moments earlier and was believed to have drowned. 3 days after his father was reported missing to the police, Jonathan Roth's son called the life insurance provider to file a claim. Yet, in an email to his son, Raymond instructed Jonathan to get in touch with him at a hotel after the fake death to let him know how things were going. Jonathan was sentenced to 1 year in prison for his involvement in the fraud attempt. Raymond also got his fair share of punishment. Number 7. Robbing your own store 2008. 2 jewelry store owners in New York came up with a scheme to stage a jewelry robbery from their own store in December 2008. Atul Shah and Mahavir Kankiria employed 2 individuals, dressed them as Hasidic Jews, and said that their store had been broken into. They then submitted a $7 million claim with their insurer, Lloyd's of London, after pouring drain cleaner into their surveillance cameras to remove the evidence. But the authorities were able to extract footage where the men were seen taking the jewels out of their own safe 2 hours before the break-in. So their attempt at fraud was wasted. Number 6. Dead Man's Fingerprints 2005. Anthony McErlin claimed to have been killed after being hit by a cabbage truck while traveling through Honduras in 2005. However, this was actually a lie perpetrated by him. He pretended to be his wife to pull off the ruse. About 500,000 British pounds was the amount of life insurance he stood to get. The insurance company was skeptical of the circumstances and had the police investigate the claim. When the police checked the supplied proof of life insurance for prints, they discovered Anthony's prints on the death certificate. After that, Anthony was charged with life insurance fraud along with his wife, who was later discovered to have participated. He then received a 6-year prison term. Number 5. Darwin's Death 2002. A reputable-looking British teacher and former prison warden named John Darwin faked his own death in 2002 by paddling out to sea in a canoe and then disappearing. The joint strategy developed by Darwin and his wife Anne led to a thorough search for Darwin's body, but no sign of it was discovered. The deception was then exposed 4 years later when the couple resurfaced in a real estate social media post in Panama, where they had both migrated to begin a new life. They had pulled off the act for collecting £679,000, and this money allowed the couple to pay off their $130,000 mortgage and start over in another country. However, they ended up receiving a prison term of more than 6 years. Number 4. Meeting the Dead on Top of a Mountain 2000. Together with his wife Sheila, Harry Gordon faked his own death in a boating accident in June 2000. Sheila eventually filed a claim on a £1.75 million life insurance policy. They said that their daughter was also aware of this plot. It's interesting to note that Sheila didn't pursue the claim any further because the life insurance company refused to pay out. After his death, Harry met and fell in love with Christine Newsom, a woman from Auckland. So in 2005, Harry and his new girlfriend came across Harry's brother Michael while they were trekking Mount Maunganui in Taronga, New Zealand. Michael was quite surprised because he had thought his brother had died in a boating accident 5 years prior. Harry refused to talk about the death with Michael at that point, and then as Michael went to Harry's first wife, she agreed to tell police what had happened. So later, Harry received an 18-month prison term for making false statements and conspiring to defraud an insurance provider. Number 3. Shoot to Kill 1972. Victor Knoll developed an engine that could significantly decrease air pollution in 1972, and he later joined forces with the Calvert brothers in business. The Calvert brothers purchased a $2 million life insurance policy on the inventor's life, and unfortunately for Mr. Knoll, the man was eventually discovered and shot to death. The Calvert brothers were found guilty of fraud after an investigation by Lloyd's, and the police revealed that they had paid a buddy $5,000 to assassinate the inventor. Number 2. Stolen or Not, 1911. Cameron's wife, Charles Aylmer, had a pearl necklace that was insured with Lloyd's. Later, she claimed it had been stolen. The insurance company suspected fraud, and they found out that the jewelry was not actually stolen. Then, for attempting to swindle Lloyd's, Mr. Cameron and his wife Ruby were found guilty of fraud in 1911 and given a 3-year prison sentence. Mr. Cameron received the entire sentence despite his refusal to provide defense testimony. When Mrs. Cameron admitted that she was the guilty party and that her husband had not participated in the crime, Mr. Cameron was still in prison. Although Mr. Cameron received a full pardon and was freed from prison, it is unclear whether their marriage endured after Mrs. Cameron's release from prison. Sadly, he later killed himself at the age of 40. Jumping a century back, let's see how the 1800s were. Number 1. The Phantom Ship 1862. Mr. Calvert attempted to cheat underwriters at Lloyd's in 1862 when he insured the Poseidon, an oil cargo ship, for €12,000. Later, he claimed that pirates had boarded and set fire to the ship, and then the insurance company started an investigation. It was revealed that Poseidon never existed.
So that's all for today's video. If you made it this far, click the subscribe button and hit the bell icon for more awesome content. Thanks for watching.